Good day, ladies and gentlemen, and welcome to our special class on Forex trading in the time of Corona. Corona has us all scared to death at the moment. I think we're all more scared about the economic effects and the financial effects and the uncertainty than we are and the actual illness. And even though I'm in one of the major categories since I'm 70, it doesn't bother me at all. I just want to stay healthy and safe. I just want to get past the implications and to get past the financial and the economic upset. So the question is, what is really coronas? Now, I have no scientific, biological, education, knowledge, or anything else. So my opinions on these don't really count because they're just unfounded opinions. But coronavirus is a zoonotic type of virus transmitted from animals to humans. And we saw what happened. It started in Wuhan, I think you say it right, in China. And it is transmitted amongst humans through coughing, sneezing, and even shaking hands. The virus can live for several hours on many types of surfaces, including clothes. To get infected is sufficient once on your fingers to simply touch your nose, mouth, and eyes. Now, I've tried, like everybody advised, not to touch your face, but it's really hard to do that. The good news is that washing your hands with soap greatly reduces the risk of any infection. The pandemic sees many governments placing people in forced quarantine, starting with China, but also countries in the West like Italy, now Spain, France, Israel, most of the Middle East, and the U.S. is starting. It's really getting crazy in New York, California. And most public events have been canceled. Schools are closed around the world. And there are whole regions in northern Italy that everything is locked down. All of Italy is locked down. We're probably going to see that in a lot more countries over the next week or two. Now, I've watched all the videos and all the information I can about understanding what we're trying to do. And all they're trying to do, from what I understand, is slow down the rate of infection. And please keep in mind that anything we talk about today can greatly be changed tomorrow. In fact, lots of things have changed significantly just since I started building this class. But these events may cause a deceleration in GDP or even recession as travel and the capability to work are hindered. As we saw yesterday, the Federal Reserve dropped interest rates in an emergency session to 0. I don't know what these effects are going to have, because me, like you, we're individual people, and the money really, and we saw in the economic crisis from 2008, it doesn't flow down. And as more and more people get laid off of work, as more and more businesses falter, I don't know how this is going to help anybody, but hopefully the governments are coming up with plans. But I know I have lots of friends who are laid off, meaning they have no source of income, and this could go on for as much as 3 to 4 months, and they can't even go out and interview for a new job. They can't get a part-time job to fill in because there's just nothing to be had. So it's also wreaking havoc on the markets. Platts has cut oil demand and global growth. Okay, China's natural gas industry is way, way, way down. Everything is falling off. Saudi Arabia sees, we're seeing lots of cuts in OPEC. China's PMI is at record lows. So we have a decelerating economy. Now, a decelerating economy would weaken that country's currency. However, a global crisis with most major economies affected may see an effect on the Forex market muted. Well, that's to a degree. We're seeing less volatility now. Bitcoin crashed, steadily trading at 9,000, right under 10, hit a little bit over 10 in January. And when I looked at it yesterday, it hit a low in the $3,000 range, which is amazing. Because you got to remember, everything's going to eventually come back. The dollar keeps strengthening. Okay. Now, the virus impact on the Forex market could affect certain currencies greatly, and others may see very little increase in volatility. trading strategies may need to be rethought to take into account the negative effect on the economy of a currency. Infection count of the virus may affect how to trade Forex. Lockdowns, government announcements, medical changes. Okay. Now, a currency whose country keeps getting headline news with increasingly higher infection counts may see an increase in volatility. Not handy when you have just decided to learn to trade Forex, but then they say there's nothing like jumping into the deep end of the pool. Jokes apart, it's important to remain calm. Take a step back, do some research, and have a better idea of what exactly is happening. Governments and media love fear. If you ever had time, go look at the VIX index. Okay, the VIX is a volatility index based on fear. They later sensationalized it to sell their news better, and the former may be used to keep us in line. This isn't anything new. It's always been around. The difference today is that they are constantly in our faces with it. Internet and social media have joined the traditional means of TV, radio, and paper to consistently drive home the message. However, the internet is a double-sided sword, and it can be a very useful tool to research facts. But keep in mind, you need to monitor closely the news and the facts that you are trading, because you see lots of items or articles published and republished and reprinted, and you may be having an article that was published today but it's 3-day-old news. So know your sources. Don't blindly just go through the internet, because you'll see something that says, I saw last night something that said something about Italy, and they hadn't even gotten to the point where Italy was locked down. They weren't even counting for the huge jump in death rates last night. So I knew the article, even though it was just printed in a major paper, was a reprint of an article run several days ago. And this can have a big effect on your trading decisions. So the World Health Organization estimates as many as 650,000 people may die of common flu each year. That's just the flu that we all get for years and years and years. This is quite a remarkable number. Certainly, we haven't even gotten anywhere close, not with Corona. True, it has only been a few months since the first case in China, and various contention plans may be helping. But this flu, although more contagious and slightly deadlier, may simply fizzle away as the weather gets warmer, like any of the common influenzas do each year. Well, the fact is, it's not doing any better in Iran or in the Middle East or in Israel, and they're in hot environments. Okay. Now, like I said, I have no medical expertise, but you have to have some knowledge to use this to trade in the markets. Now, for sure, Corona is having a big media effect, and it's on every news outlet, TV, radio, and internet. Governments are already making contingency plans as to prop up the economy, as they fear economic activity may be disputed and disrupted. Most of these plans will involve either or both more government spending, tax cuts, and interest rate cuts. The Fed already cut its rate by 50 points, but then it cut it more. Okay, we had the emergency drop just yesterday. So that's what I'm saying. You need to stay on top of things, because 2 days ago that was fairly accurate. 24 hours ago we had another change. So the logical consequences of the Corona impact on the Forex market. To determine the consequences on Forex markets of global pandemics, such as the case of Corona, we can look at the impact on the stock markets. Stock markets are an excellent gauge of economic activity. Forex markets in the long run follow the development in each country's economy. So looking at the effects of previous pandemics on the stock market allows us to venture as how much the Forex market might be affected. So we can see on this chart, and I didn't make the charts up, I found them on the internet. I found them from a very reliable source, but we can see what the market effect was with each of these outbreaks. Now, most of them didn't even hit a global scale. They made the headlines news and scared us a little bit. I remember SARS. I remember Ebola headlines, but I don't ever remember it coming to us. Measles we have all the time. Okay, swine flu, MERS. I mean, most of these didn't even infect that many people. So the table looks at the U.S. stock market and the worldwide index compiled by Morgan Stanley. The U.S. economy is the world's largest, and if that market is affected, there will necessarily be repercussions throughout the globe. So what we see on the table is that there was little negative effect on global economies. Statistically speaking, it probably looks like there is a positive correlation between pandemics and positive performance of the stock market. The coronavirus impact on Forex markets may be different. Now remember, these other implications, these other viruses, did not pop up all over the world in these kind of numbers. Now, we're not talking about the flu. In flu season comes, flu season goes. We have sometimes worse, sometimes better. But what I've read is that because the flu has been around almost 2,000 years, not coronavirus, but the flu, the standard flu, human beings genetically have built up not antibodies, but resistance. So it's not something new attacking our bodies. So a lot of people never get the flu. I don't think I've ever had the flu in my life. Okay. But when we do have big flu epidemics, it doesn't have that negative effect because it's been around and human mankind's absorbed it. Where we look at the first couple of years of HIV, do you know 790,000 people died? Yep. Because it was new and the bodies couldn't fight it off and we had no medical. Okay. So how much has the coronavirus impacted the Forex market? We can have a look at the impact on the stock market since the outbreak of the virus in various Western countries. I'm going to take February 3rd as a starting point to look at the stock market performance. On that day, CNN reported that there had been 426 deaths and more than 20,000 contagions worldwide. So here's what we got from our table. Okay. Now what we see is the week of February 20th, a huge effect on the stock markets. So looking at the daily chart of the UK stock market, we see a similar pattern. The FTSE 100 was in a sideways trend with a certain bullish tendency over the previous months. Back to August 2019, the lateral price movement was mainly due to uncertainty created by Brexit. However, the stock market was holding its ground. That is until the 24th of February when the FTSE tanked, as you can see on this chart, as the riskiest asset by investors. So they usually get hit very hard. The FTSE 100 has dropped 20.8% from its high on February 24th. That's a huge decline. You could say a market rout is in effect. And as the pandemic spreads, we probably haven't seen the full extent of the coronavirus impact on the Forex market. The corona impact on the Forex market is inevitable given the strain being taken on all major stocks. Stock markets are in a turmoil because of the possibility this pandemic will restrict economic activity in a great way. This is plausible as we are seeing restriction on movement to and from large geographical areas, major mass events shutdowns, and we are not talking about only in China. When we have mass sporting events closed down, what's that mean? The players aren't playing, the stadiums aren't selling tickets, there's no cash coming, the advertisers are, or the networks aren't buying up the time and showing it, and the advertisers aren't buying advertising space. All of that flows back over and over. And the problem is, it's like a hamster running in a cage. Okay, once he's got that wheel running, it runs pretty smoothly, and hopefully if there's not a hiccup or something wrong in the little wheel, it'll go on forever effortlessly. But once there's a hiccup, it becomes uneven. But once there's a slowdown and even a stoppage, it's so hard to start that wheel moving again. Now, during these times of crisis, we tend to make emotional decisions. Fear is always a big driving factor in the market price action. It also dictates more general social behavior too. In Italy, whole supermarkets saw their shelves emptied in days, and we're seeing the same thing in the U.S. We're seeing, I lived through the earthquake in Los Angeles. I survived many severe hurricanes in South Florida. So I know what this happens. We can almost say this is like South Florida when they're predicting the earthquake to be a category 5 and saying it's going to hit land 2.5 days from now and cut right through Miami and up the coast, and everybody's in mad panic. Well, that's where we are right now. Okay. Now, everybody's glued to the TV set. We see the hurricane move this way. We see it move that way. We see it's going to bypass Miami and Palm Beach and come in, up farther north. Everybody down there breathes, but it's constantly changing, and hour by hour, day by day, it's all. Now, there's a difference with weather scenarios and disaster scenarios because it's a long-term after effect. When we survived the hurricanes in Florida, it was everybody was safe and sound. We all had stock. We all had houses full. Okay, I thank God had a generator. But it was the implication that after the severe hurricane, okay, the supermarkets had no power. Their backup generators had run out, okay, because the hurricane lasted so long. All their frozen food, all their refrigerated food was no good. But there were so many down wires, so many down trees that the trucks from other parts delivering goods couldn't get there. So it took a long time for the shelves to get full again. And a long time when you're in disaster was, a day, 2 days, 3 days. Okay. Now, everybody should have had inventory. But you got to remember, most people's houses also lost power. You lost power in your refrigerators, so all of your stuff was no good. Okay. You're sitting in the dark somewhere. Okay. Or you need to get somewhere. You have no gas left in your car, and you say, the hurricane's over. I should be able to get gas. But the gas stations, and they have power back now, but the petrol trucks couldn't get to them. So it's got all different types of effects. You have to look in the long term. So it's reasonable to think that fear also drives masses in the Forex market to take the same action in their trading strategies. This fear has shown a certain pattern. Investors don't like risk in general, or rather they would hold assets they don't have too much of a bumpy ride. Also added that in times of danger and threats, investors will typically favor less risky assets. We've already seen the UK short-term gilts drive into negative yields. This happens as investors dump risky assets such as stocks to buy low-risk government bonds. We don't actually have a financial crisis, however. The fear that this may occur is driving the markets right now. Investors are acting in accordance to the fact that a financial and economic crisis is just around the corner. And we're talking about millions of people out of work all over the world. We're not talking about the financial crisis that had worse effect on Spain and Italy and Portugal. And we don't know, most of us who had jobs or incomes through all of that weathered all of it without a hitch. My house went way down in value, but I still made my mortgage payment. My house went back up in value. Who cares? But all the people that didn't get overtime, people who lost their jobs, who couldn't find new jobs, it gets to be difficult. So as the market players get emotional and everyone heads to the exit door, certain markets will get hit harder than others. Trading strategies tend to align in times of crisis, and that includes the Forex markets. Everyone knows where the perceived danger is, and they also know where the perceived safety is. Now remember, in online trading, we're looking for short-term volatility to make quick profit as markets move up or down in this volatility. But which currencies show the coronavirus impact on the Forex markets? So let's have a look at the Japanese yen, which is the world famous safe haven. We've seen a rush to this currency in the past days. The yen is considered a haven currency when compared to the US dollar. This might seem surprising, but whenever there is a global crisis, the yen is usually appreciated. If the US dollar is considered risky and the yen is considered simply less risky, then the USD JPY will simply go south to reflect investors and market preference. So in the chart, we can see the extent of the coronavirus impact on the Forex markets. The chart shows how the yen has appreciated over the 12 trading days. Now, this is the USD JPY, so as it goes down means the yen is getting stronger, the dollar is getting weaker. This has happened as a coronavirus contagion, and the death toll counts have climbed drastically. looking at the previous month leading up to the dollar rout, we see a steady upward trend for the USD JPY. Now, we keep saying the dollar rout. The dollar, though, against the shekel, the pound, is flying upward because the dollar and the U.S. economy is in better shape than these other countries that are facing the same economic disasters. The most recent data showed GDP shrunk by 7% in the quarter. While the U.S. economy has been racing forward, it seemed a logical rally for this pair until the coronavirus showed up and investors scattered for safety, forgetting all the fundamentals. If we look at the euro-US dollar, we can see a similar coronavirus impact in the Forex market. In the chart, which I'll show you in a second, we can see how the euro-US dollar touched a low 107.78 on the 20th of February to then reverse rapidly higher over the following 12 days to reach a recent high of 114.95. That's a 6.2% increase, exceptionally remarkable when the ECB recently cut rates into deeper negative territory and the euro currency was in a constant slow decline since mid-January. But then what's happened is also reversed because now the epicenter for corona has moved to Europe. Europe was outside of Spain, Italy, and then a little bit of Spain was seemed to be isolated from all this. They didn't have to, just like the UK seemed to be isolated. Now it's all meeting head on, and the Eurozone is the epicenter. So what we see is the euro falling against the dollar. So again, the Fed rate cut would have helped this rally, but the coronavirus added the extra fuel. So here we can see the dollar strong, the euro is going way down in value, and then we see it strategically turn and the euro goes all the way up and hits a high in the 114 range. However, the coronavirus impact on the Forex market will not always be negative for the US dollar. As we mentioned before, investors prefer a less risky asset to a riskier one. So, with each currency pair, a comparison should be made. If we look the coronavirus impact on the Forex market in emerging markets, we will see that the dollar benefits from the current corona pandemic. So let's sum it up. The spotlight is back on shorting the financial markets, with some experts suggesting the only safe currency is the dollar. And why is the dollar the only safe currency? It is the most stable because the U.S. has the biggest economy and will most likely recover faster than all the other economies. In these times, knowing how to trade the euro dollar could be quite profitable, as it represents 43% of the dollar index. We have seen reversal flash crashes, and it's time like in March 2020 where rapidly spreading coronavirus in Europe has all the bears' interest in shorting the indices such as the FTSE 100 and the DAX. So, when in doubt, stay is what we learned from almost 18 years of trading these financial markets. If you would like to learn how to take advantage of these trading opportunities and need more help with your current strategies, let us know. Or watch more videos at Barry Norman Investors Trading Academy, and we'll help you out. And we're going to keep updating all of this. We're going to take a closer look at gold, a closer look at oil, and a closer look at the stock market over the next few days. But my intentions are to upload more videos every day because, like I said, the markets are changing faster than I can actually make the webinars. So thank you very much for joining us, and hopefully you learned a little bit today. Bye now.